Good afternoon, traders. This is Chris Buss with Traders Profit Compass with your Weekend Navigator for Sunday, October 11th. Okay, hope you guys have all wrapped up a good week of trading last week. We had some nice winners in the group. If you didn't, there's always next week, so let's get into it. What I'm going to do today is run through the euro and the US dollar as it relates to precious metals. Then we'll go through the indexes and see where we stand. Then I want to spend a little bit of time on market internals and then move on to some trade ideas for next week. So let's get into it. This is the euro US dollar pair. Just recapping recent weeks, we had this consolidation and breakdown. I was thinking that we would get downside follow through on the euro. That didn't happen. It reversed, showing some strength, and that being roughly 62% of the US dollar index, that made the dollar go down. So let's take a look at that. This is a weekly chart. You can see we had this downtrend line. I was thinking this was going to break out and move above with the outsized short positioning of traders that are all leaning short on the dollar. Turns out, at least for now, that their positioning has been correct with this sharp reversal off the downtrend line, making the dollar weaken, come down, resuming its downtrend, at least for now. And that found its way into the precious metals, where we see for GIII, the ETF for gold, that it has broken above this downtrend line, and also probably just as importantly, moved above this overhead resistance at 180 and has taken out its fast moving averages, the 8, the 20, and the 50. So right here, I think we've got an objective long for gold. You may have taken that on Friday, which would have been fine, would have been perfect. But for heading into next week, I think traders can be long against 180 and the 50 EMA at 179. Set your stop just below that level. You can see here on RSI, we're breaking above 50, which puts it back into the bullish regime for RSI. Momentum is lagging a little, but you can see a bull cross has executed here. And what we want to see, well, there's two things. What we want to see, if for those that have gotten long, we want to see momentum pick up and move above the zero line, and the US dollar continue to weaken. It's been almost a one-to-one relationship. When you have an up day on the dollar, you're going to see a down day in gold, and vice versa. But as it stands now, gold looks like a buy as long as it stays above 180. Now, that doesn't mean there's going to be clear sailing. We've got a resistance level right here at 185, and then some other minor resistance levels above that towards the recent highs at 192. But if you take a longer term perspective, as long as price stays above 180, it keeps the chart bullish. So what I'd like to see you do is go out in time a little bit. Go out a couple months, maybe even to January, and take a position in gold and let the thing, grind away. I think that's the best way to play it, rather than try and get something for 2 weeks out. I don't think it's going to work like that, or at least there's a lot more risk in taking that approach. If it hesitates or even pulls back a little bit, you're going to be hung with those short-term call options. Go out in time give it some time to work. And if you're more comfortable or want to reduce the price of that option, you can always sell upside calls against it. You know, open a spread position like a 182, 192 and a half spread, or a 180, 190, and then just let it work away. And that will reduce your cost of the overall structure. If you really wanted to get fancy, you could buy like a January 182 and a half or 180, and then sell nearer dated call options out of the money, like a, I don't know, like a November 192 and a half. And if you plot that on your options platform, you'll see that, you know, the one that you sell out of the money earlier dated will decay a lot faster than the one that you have. So barring, you know, the thing exploding up to 200, you'll still make money, but of course with the spread it'll limit your upside potential. Just depends on how you want to play it, but the bottom line is I like gold long here against 180. Very similar look with silver. You're going to get more beta, more volatility in silver than gold, but the setup is very much the same. It has recaptured the 50 EMA that you can see here at 2283 and has broken above this overhead resistance level at 23. So I like silver against the 50 at 2283 and looking for a move back up towards 24 and a half, 26, and then ultimately towards 28 if everything works out. You can see here a cleaner bull cross than we had in gold, and RSI is making a move above the 50. We just want to see some follow through here, but I think this is a very objective location to get long with a stop just below. If it doesn't work out, we've got, you know, a paper cut, but if it does, there's a lot of upside here if the dollar continues to roll over, and that will be a tailwind for gold and silver. On the miners, price is making a move above this downtrend resistance line at 40. It too has recaptured its moving averages, the 8 to 20 and the 50. So I like miners long against 40. You've got a 50 EMA right at 39.95. So that is going to serve as support now that price is above. I think you can stay long against 40 with a stop just below and look for a move up towards 43 will be some resistance, and then back up towards the highs at 45. Just to recap the metals, you're going to get more beta and also more volatility with silver and the miners than you would gold, but I think all three are good long candidates at this time, with the dollar being rejected at downtrend resistance and the euro showing strength. You can see here on GDX, we've got a bull cross emerging and RSI breaking above 50. So those are all supportive of higher prices in the weeks ahead. Moving on to the indexes, we've had some really interesting price action the last week that have really turned things around technically. The thing I want to point out here on the weekly is this bull kiss of the PPO, where the PPO line looked like it was going to put in a bear cross, reversed, right at the signal line and now has turned up. They call that a bull kiss. The flip side of that would have been a bear kiss, where, you know, it came up to it from below and then rolled over. Those are often very powerful, you know, reversal signals, because these don't turn on a dime when you're on a weekly chart. So that's a bullish development. You can see here that price had been coming down. It was looking like it was going to make a run down to the 40 EMA, but it reversed and has since put in a couple of weeks of higher highs, and it looks like it has reversed. So those are positive bullish developments. Let's go down to the daily chart where we can see things much clearer. Notice the RSI has broken above 50, putting it back in bullish territory, and so too has PPO broken above the zero line, putting it back on the bullish half of that indicator. When we look at price, we have been trapped in this $20 range for the better part of 5 or 6 weeks. We broke out this week above 340 on a measured move basis. Remember, whenever you're in a trading range and you break out of that range, the measured move target is the width of the range. So adding 20 to 340, we have a target up at the prior highs between 355 and 360. Really, the only thing short term that would turn this chart bearish is for price to return to the trading range, and that would be a very bearish development. That would make this look like a false breakout. And then, of course, if price re-enters a prior range, the target becomes the bottom of that prior range back here to 320. That's not a prediction. It's just letting you know what would turn this chart bearish. But as it stands now, everything looks bullish, and the base case or the favored case is a continued move up towards the prior highs in the mid to high 350 range. Moving on to the Qs. Again, we have been talking about these high level bear crosses, usually not ending well with sizable pullbacks. We got the bear cross, but we did not get the follow through. Price had come down here and found support at 260 and has bounced and reversed, with the PPO trying to curl up and put in a bull cross. You can see that RSI never broke below 50, staying within its bullish range above 50. So what we really need on this chart to keep it going is the next target, which is the prior high. If we were to break out there, then we're off in blue sky country. But near term, the target is the prior high up in the mid 290s, 300 area. If we go down to the daily chart, very much like SPY, price was trapped in this $20 range between 260 and 280. We took that out this week, so the measured move is 20 added on to 280, which is back up at the highs at 300. We see the bull cross on PPO moving above the zero line, putting that in bullish territory, and RSI as well, moving above the bearish regime back into the bullish regime above 50. So this looks strong. Price is above the trading range, above all the moving averages, all stacked bullishly with the shorter EMAs, the 8 above the 20 below above the 50, and the 50 above the 200. That's what you want to see in a bullish setup. So now it's all about follow through and making its way up towards 300. What you definitely don't want to see is a pullback below 280. That would be a very bearish type setup. One thing we may see is a back test of 280, which is fine. That happens all the time. We just don't want closes below that 280 level to keep things bullish and positive. IWM, we have been watching over the past few years. Price has spent most of its time between 140 and 157.50. We've had occurrences in the past where its price has gone up to 167.5. That happened twice. We had this big double top back in March, and then of course price let go and recovered. So with price moving out of this trading range, it puts it in a position to challenge this 167.50, and if it can break out there, then it will have broken into all-time highs into blue sky country, and it should be off to the races. Nearer term, traders can be long against this on the weekly chart against 157.50. We can see that PPO took a dip but then reversed, so it's staying positive, and RSI never dropped below 50, so that's positive as well. Actually, over the last couple of weeks, IWM has been outperforming the bigger indexes, SPY and QQQ, as traders have embraced the cyclicals and value names that have been beaten down. Probably a lot of that is anticipating the stimulus to come, whether it's before the election or after the election. So if that trade continues to be embraced, we should see IWM go higher. On the daily chart, you can see this break above 160, clearing the path for a run towards the prior highs at 167.50. I wouldn't be surprised if there's a hesitation or a consolidation under that all-time high level and then eventually pop out. But if you've been long from lower levels, I would first be moving your stops and strikes up to the 160 level. If and when price were to break out above 167, that's another opportunity to move up your stops and your strikes to that level. And then with blue sky above, if you haven't been in the trade, that's an objective level to get long against the all-time high and look for continued upside in IWM. We see the bull cross move above zero, RSI is getting up towards 70, which typically signals overbought. That's just a cautionary yellow flag. That's not a sell signal. It can go up here and stay overbought for days and weeks. But that's where I think you may see a little hesitation here at 167.5 at that key resistance location. Let's look at some market internals. Art over at Stock Charts put together this breadth thrust analysis of the top 6 sectors. You can see that when you get the advanced decline percent, the ADP, moving above 30, that signifies a breadth thrust. A negative breadth thrust is below negative 30. And this chart goes back, a year and a half to last summer. You can see that when we get these positive breadth thrusts, it has bode pretty well for continued follow through for the sectors that it tracks. Now, if we look at technology, moving down towards XLY, we got it here, we got it in financials, we got it in industrials, and we got it in healthcare. The one sector we did not see the thrust thus far is communication services, XLC, which is, for all intents and purposes, Facebook and Google. That's 44% of this sector, and they've been languishing to a certain extent. But on the plus side, we've got 5 of the 6 biggest, most important sectors all showing positive breadth thrusts, and that's a huge positive on the market internals, showing wider participation, and that's what you want to see in a bull market phase. Wider leadership, wider participation of the constituent components. This is the McClellan Oscillator that, if you've been following my work, I pay attention to. We've gone from an oversold reading just a few weeks ago to now up towards 60, which is a yellow flag. You can see that it can go much higher and has in the past, but keep this on the radar. If we get a power move over the next couple weeks and this drives up towards 100, that would be a place to be cautious. Certainly to make sure you've booked some profits in your longs in anticipation of a likely short-term pullback. And we see that in the NASDAQ oscillator as well, moving above 60. We want to keep this on the radar. These oscillators stand undefeated. I want to make that point. You just don't see it come up here to 80, 90, 100 and stay for weeks and weeks. You'll get a spike and then you'll get a big pullback. We've seen it time and time again. So it's definitely something to respect and keep an eye on, and not just, kindly blindly, be long everything when things are, when things can't go up or go up every day. They don't go up forever. And when these things get overbought in these readings, they always come back. So let's keep our eye on that. I think we're in yellow flag territory right now. I don't think it's a reason to bail out altogether. It's just a yellow flag at this point. Taking a quick look at the VIX, we saw a nice pullback at the end of the week on the breakout, which is what you want to see. Now, going forward, we've got this uptrend line off of this low in February of this year. We saw the bounce in early September on that sharp pullback, but has since been gradually bleeding off. If you see VIX lose 25 and start moving towards 20, that's going to be a good bullish sign. If you see VIX starting to creep up back above 2750, that's going to be a warning flag. You'll probably be seeing that in price. And certainly if it broke above 30 right here, that would be a red flag. If we're in bull mode, we shouldn't see VIX going back over 30 in my mind. As long as we keep pinned down below 27.5 and preferably a break below this trend line into this 20-25 area, that's what we want to see. That we want to see some vol coming out of the system. That would be a very positive sign. Now keep in mind, we've still got a lot of volatility catalysts out there in the market. We've got Trump tweets. We've got Supreme Court potential fireworks. We've got COVID stimulus discussions. We've got, economic readings that are coming out all the time. So there are catalysts out there to pull this market down, but from a price perspective, what we saw across all the indexes, breakout in SPY, breakout in the Qs, breakout in IWM, that all says bullish. So I think the posture should be bullish. There's always stuff to worry about. There's always stuff to keep our eyes on, but price has spoken, and I think we've got to respect that going forward. And I think being bullish is being on the right side of the trade at this point. Let's move into some trade ideas. I was doing some relative strength sector rotation studies, and steel popped out as an up-and-comer. That would be in line with, the reflation commodity type trade. I was going through, and Steel Dynamics, STLD on the weekly, stood out as a potential nice long setting up. You can see here at 34 is a well-defined resistance level. We've got price currently at 32.50. Getting a weekly close above 34, I think, sets the stage for this to make a move towards 40, the low 40s. We've got a big volume over price void right here above 34. So I think above that level, resistance is diminishing. So I think it is a good long above 34 with a stop just below, and let it grind higher up towards 41, 42, where it will run into overhead resistance. I like that trade. And you can go through some of the other steel names. This one just stood out because of this void, and I always like to see those. I think it sets up for a potentially quicker move than, one in which is going up, but there's a lot of levels of overhead resistance in between. So just keep in mind, this is the weekly chart. You've got to get a weekly close above 34. And I don't see a real need to front run it as long as it's below. Just set yourself an alarm and get long against 34 with a break above. KWEB is the ETF for the China internet names, Baba, JD, some of the other names, Baidu, all those names are in the index. It's been trapped in this $8 range for several months. Now is emerging, making a push above 71.50 towards 72. I like this one long with an $8 measured move target up to 80. And what I like about this one, aside from the technicals where you see a bull PPO cross and a breakout on RSI and a break in price above the range, what I like about this heading into earnings season is you'll be able to sit in this name for a couple months and capture the earnings in Baba, capture the earnings in Baidu and JD and all these other names. Whereas if you're playing a single name, there's a lot of risk in holding through earnings. And it's been my experience that that's a losing proposition long term, because you never know how these things are going to react at earnings, especially trading options. You can be right, but end up losing money because of the implied volatility crush and a lot of other factors. Market makers are paid to win during earnings, and they'll set the prices where something really dramatic has to happen in order for you to make money. So I really like going into ETF mode on a good setup heading into earnings, where I think you will see good numbers out of Baba and these other names. And I think given that the Qs have been strong, I think there's a good chance for this to push higher into the end of the year. Just give yourself enough time. I think looking out towards a November or December expiration makes sense here. Camp out with a December 72 call or a 72.80 call spread. Something like that would fit the bill perfectly on KWEB. Burlington has a cup and handle working against 220. I think if it can hold this 218, 220 area, it's got a good chance of moving back towards the highs at 250. I like this setup. And from a measured move basis, remember on a cup and handle, it's this distance here, the depth of the cup, and that is well within reason for a target of moving back towards 250. I did not check earnings on this one, so please do that before you take a position. Typically, these apparel retail are at the end of the earnings cycle, but check. But hopefully we would get a pre-earnings push higher ahead of earnings and then be able to jettison the position before earnings are announced. GIII Apparel is another name, very similar setup to Burlington with the cup and handle. But what I like about this setup, two things. Actually, three things. We're getting a bull cross on PPO above the zero line, which is bullish. We've got RSI trending higher and above 50. That's bullish. We've got price here pinned down right below lateral resistance at 16, where the 200 EMA comes into play. But look at this price void. We've got basically no lateral resistance above 16 all the way until 27. So we've got, if price can pop 16, take out the lateral resistance and take out the 200, it will have recaptured all the EMAs with price above, moving into this big void where there's very little resistance. I think you could see a relatively fast move back up towards 27 if the market stays constructive. I really like this trade. And the reason I featured Burlington and G3 is that the apparel retailers have been strong, showing relative strength, positive rotation for the group. So I think if that persists, there's a good chance we get this breakout here above 16. And what you want to see on any setup like this, 1605 is not going to cut it. I want to see an impulsive move, through that level and for it to hold. With so much upside, you don't have to be, 1601 to get a good trade. You'd rather see, a good, impulsive, strong pop above the 200 and this lateral resistance to have a little bit more confidence that it's for real. So, set your set your alarms, take a look at the candle, and then I think getting long against 16 and the 200, you'll have a very clear line to shoot against, and you'll certainly know if you're wrong if price comes back down below. Once it breaks out, you should not see price come back down into the 15s and 1450 area. Team, this Atlassian software has been thrashing around in this $35 range between 165 and 200. Really strong candle on Friday, pushing up to this 200 line. I like the idea if price can break out above 200, get long there with a measured move towards 235. Check earnings, but I mean, they're going to be coming up, and I think there's a better than even chance that if this pops, you get that pre-run earnings where we can pull the ripcord in a month or whenever, right before the earnings announcement on this name. But I really like the well-defined level above 200, get long. Don't front run it. Wait for the trigger. Once the trigger happens, pull the trigger and then look for higher prices where they stop, just below, 199, 198, 197, something like that. you should not see price come materially back into the range once it breaks out after 3 tries. So I like that setup. Last one is Uber. Been seeing a lot of institutional bullish order flow into the name. A lot of big money either wants this to go higher or thinks it's going to go higher. We've got that cup and handle that we've seen on several of the other charts, with price pressing up against this well-defined neckline here at 38. If you see a pop above 38, that's your trigger to get long. Notice the rising RSI trend. You know, momentum could be a little stronger here, but if you get that pop, you're going to see momentum pick up quickly here. It is in the positive range, so that's, you know, that's good, that's bullish. But what you got to see is a pop above 38 where you can get long with a stop just below. And on a measured move basis, looking for an $8 to $10 move higher. And you can see here the prior high, at least the past 52-week high, was up in the low 40s. I think this could see, you know, 46, 48 heading into earnings if the market stays positive and we can get this breakout here with a run into earnings. So let's do a quick recap. Dollar's falling, resuming its downward trend. That's bullish. Precious metals and miners, I like them all. I like gold long against 180. I like silver long against 23. And I like gold miners long against 40. You know, don't go nuts and get long all three. Just decide how you want to play it. If you're looking for, you know, absolute beta and can handle the volatility, you know, silver miners, and gold miners are the way to go. If you want something more methodical, pick gold. It will not have the volatility that silver and the miners will have. Moving on into the indexes. This week we got the green light. While price had been thrashing around in that $20 range on SPY and QQQ, there was a lot of concern with the volatility in the chop and the indecision that they could have pulled the rug at any time. But now we've broken out. We have clear levels to shoot against. SPY, 340, 342. As long as price stays above that, it's bullish. Qs, as long as price stays above 280, it's bullish. IWM, as long as price stays above 160, it's bullish. If the cyclical beaten down value trade continues to persist, I would expect IWM to continue to outperform. And if you get a breakout above 167.50, you're in blue sky. That would be a perfect place, if you're not already participating, to get long against that well-defined level in IWM for a continued push higher into the end of the year. We went over a bunch of trade ideas. What I like about them is all of them have well-defined levels. You will know immediately if you are wrong, and if you are wrong, you get a paper cut. If you're right, you got good upside on all of those setups, and that's what I look for. Now, on the week ahead, we've got earnings season kicking off, and the run-up into earnings is usually bullish. Okay? So we want to lean bullish into the earnings season, but we don't want to hold any individual names through earnings. There's a lot of risk there. We have all the big banks reporting. Financials have been doing well with the rising yield backdrop. I don't expect, because the rising yield has just been in the last few weeks, it's not going to have an impact on big bank earnings. What you want to watch for on these big banks, number one, loan loss provisions. Are they growing or are they scaling back? If they're growing, that's going to be a big commentary on, oh my God, we see a lot of economic headwinds, more bankruptcies. We're going to take, account of that. We're going to set aside money for bad loans. You don't want to see that. You want to see them saying, here's our loan loss provision. It's not as much as we had anticipated. We see bluer skies ahead. They're not going to give the all clear, but you want to see and hear more of an improving backdrop. What else? Oh, and then their outlook. You want to see lower loan loss provisions, and you want to see forward guidance and commentary being positive. I think if you hear that, really good chance that financials are going to continue higher. Then we'll get into the regional banks, which don't have the capital markets like the big banks do, trading revenues and that kind of thing. They're much more tied to the real economy. So watch the banking index, KBW, and then watch the regional bank index, ETF, KRE. And you want to see those grind higher, along with XLF, which has been doing really well the last couple of weeks. So that's all I've got. I hope you like the content. If so, please hit the like button, and if you're new to the channel, subscribe. I'd really appreciate that. And if you like the content, please pass a link along to other traders in your trading circle that may benefit from it. I'm really trying to expand the viewership of my content. I think there's value here. I'd like to think that I'm helping to keep traders on the right side of the trade, and that can only be a good thing. So also look over in the show notes. You'll find links to the blog, where you'll find a lot of helpful content for aspiring traders at all levels, and also a place to register for my content, where you'll get all my information at least 6 days a week and intraday with trade ideas and market updates throughout the day. So enjoy the rest of your weekend and look forward to a good week of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.